Alright, I'm going to introduce our next two guests, Roy and Thorsten. Can you try to come up, right? Everybody please give them a round of applause. So for this one, it's still on financial inclusion, but since both of them have a lot of technical background, I thought we'd make it a bit more technical. I'm not a technical person myself, so please forgive me if the questions may not necessarily be the best. But just a quick introduction to Roy. So most of you know Roy probably from Sentinel Chain. The Sentinel Chain is just one of the things that InfoCorp has built. Roy is the CEO of InfoCorp and therefore founder of Sentinel Chain. One of the many things that he's done before is he led the efforts to develop the FAST, the Singapore Real-Time Payment Network, across 14 banks. And InfoCorp has essentially developed a financial infrastructure for financial inclusion. Most of you probably know them from Sentinel Chain and tokenizing cars. Roy will explain a bit more afterwards. Thorsten is the CTO and co-founder of SmartPesa. He has more than 20 years of experience building solutions and integrating systems in financial services. And SmartPesa deploys payments and agency banking in emerging markets. And they have also built Credible, which essentially takes the data on merchants and puts it on the blockchain. So, kind of to expand a bit more on what I just said, can you give a quick introduction to what you guys are doing? Not too much into technical details, and I'll give you 3 minutes this time.
So, just to introduce myself, I'm Thorsten Neuman, based in Singapore, but originally from South Africa. And so I have a technical background, I like sharing within the community and kind of discussing certain topics, how to design things, how to architect things. What SmartPesa has done is really build technology solutions for the emerging markets, focusing on payments and agency banking. So what we do is we really look at the market, we say there's not enough infrastructure, right? There's not enough access to finance. And what I mean by infrastructure is if you are handling cash, you need some way to move that cash around. And so what we saw in Philippines, Malaysia, and Indonesia, even the other neighboring countries, is that there's not enough financial touch points. So even though you might be working somewhere, you might have a bank account, you might be underbanked, you can't easily transact. You also don't have any benefit from the banks, right? Because they don't know anything about you. They don't know who you are, they don't know how much money you can pay, they don't profile you properly. So we said, well, if we can build that infrastructure out, we can build that network to help the banks extend their reach, we're actually solving a financial inclusion problem. And so the summary is we've been doing this for 4 years. Been to a lot of these emerging markets, similar to Roy, met with the likes of the ADB, the Asian Development Bank, and rural banks, and traveled into far and strange places. But that's really been in pursuit of pushing this agency banking and payments agenda. And so that's kind of our recent history, where we've done seed and angel funding, we're a revenue generating business, and we've had some experience in blockchain, and that's why we're sitting here today.
My name is Roy Lai. I'm the CEO and founder of InfoCorp Technologies and Sentinel Chain. InfoCorp Technologies is a Singapore-based fintech company that aims to solve the last mile problems in financial inclusion through the use of blockchain technologies. How we come about with this concept of Sentinel Chain, right? We started off essentially not really as a cloud tagging company, right? And actually, I'm very impressed with my friend here, Thorsten, because he's solving a very tough problem, which we tried to solve previously, which is payment, right? But the thing is that payment is a very difficult problem to solve in financial inclusion, because in Southeast Asia, we are looking at about more than 73% of the adult population not having bank accounts. That means without access to financial services, right, or cannot afford to have a bank account, bank services, because it's too costly for the banks to provide this to the other banks. Most of them are in the rural areas, right? So there's no incentive for the unbanked to use payments, digital payments, because it's actually more safer for them, right? They feel that if they're holding on to cash, and of course then payment is not free, who's going to pay for the transaction fees, right? So the adoption problem is a problem that's very difficult to solve unless you start to lend that money. Then you can probably use the electronic credits to make payment. right? So, but then solving the loan problem, we realize open a different kind of world, right? So you have the credit history problem, employment history problem, verifiable identity problem. And each of these problems, as our previous panelist has mentioned before, is actually a tough problem. Entire industry being created just to solve each of these problems by itself, right? Because there is no way to currently prove that, right, how much the unbanked are actually worth, and in order to create a credit history, it takes time, right? So if the unbanked has no money or no cash, what do they have, right? So according to this Peruvian economist called Fernando de Soto, he estimated that in the whole world there's about 1.9 trillion US dollars worth of informal asset that has not been formalized, right? And most of this asset are in the form of land title. Okay? So if you are able to formalize it and prove that you actually own this asset, you can unlock a new form of financing, right, from this state capital. But we feel that it's difficult to solve the land title problem, partly because blockchain itself has an immutable property, but it could be used either way, right? Because if the data is corrupted before it enters into the blockchain, it is a human problem that I don't see that we have a solution to solve today, right? But I think that if we look at what else the unbanked have besides land, right, that is informalized, more than 50% are in the agriculture space. So they have livestock, okay? And if we can find a way to prove that the livestock belongs to them, then they can have a way to prove that they own that much asset and is able to then use this data to create collaterals for loans, right, through working with the MFIs or with the livestock insurance company. So this is how we come about with the business model on Sentinel chain.
Okay, so the same question to start off that I asked Karen and Robert just now. What does blockchain do for you that normal technology can't?
So in our position, what we saw as a payments and agency banking provider is that the market is fragmenting. And what I mean with that is that you've got so many different choices, and like Roy said, you can't force somebody to now suddenly switch to digital. But we do see, the telcos pushing with WeChats and Alipay and wallets and QR codes and all these different mediums popping up. And what we realized, us focusing really on the merchants, right? Focusing on the businesses that play this pivotal role in these communities, because they're the ones like the provision shops and the retailers and the pharmacies and the motorbike repair shops, is that they've got a problem accepting all these different types of payments. And our early journey started by looking at cryptocurrencies and saying, well, how do we add those? So now cryptocurrencies are a form of value, and so when it has cryptocurrencies, how would they even use it in the day-to-day? And so that's where our journey started on adopting blockchain technology and putting it part of our platform, so that you can go to a merchant and you might be buying, goods over the counter or paying for a new motorbike tire, and you can do that in, for instance, Bitcoin, Litecoin, and Dash. And so taking that risk away, where the merchant doesn't need to know about all the technical complexity, he just wants to be paid. Now you might wonder if that's not too early, and certainly is, but what we have seen is that there's been a strong push in this fragmentation, and then it'll continue. So it's almost getting in early and positioning ourselves well, because I'm speaking to banks in the Philippines who are saying, how do we start accepting crypto payments? How can we take that crypto, give it to our foreign exchange desk, and settle it into Philippine pesos for the merchant to receive in their bank account? And so with the regulators being warm and looking at these type of options and the markets moving in that direction, this was our entrance into blockchain. But I mean, I will caveat, I don't think that crypto itself is perfect or that well suited for payments. And so I think there's a lot more value in actually using blockchain for data as opposed to just using tokens for payments, which we will talk to just now.
I think there's a perception that blockchain is linked to payments, partly because of how it came about through Bitcoin. But I think that actually payment is a very difficult problem to solve using blockchain, right? And Bitcoin is not really a very good mechanism as a substitute for electronic cash to begin with. What I think that is more important that the blockchain has brought about is its property of immutability, right? And this is something that traditional database can't really solve, even though you may have technologies like distributed database. The difference is in that the control and the ownership is being decentralized, and for that matter, you're able to create more trusted data. So why is it that we are able to solve this problem currently using blockchain when previously, in my example, right, the example I'm using is Myanmar insurance, like for livestock. Right? For the last 10 years, they ran into this problem of not being able to provide any livestock insurance. So the question is why? Well, so typically, I mean, the farmer may have like many cows, right? They have like 20 cows, 30 cows in the farm. But they just insure just one cow. Why? Because if let's say one of the cow died, you can just swap the cow and claim insurance. And they just pay premium for just one cow. That's why insurance company will go out of business. So for 10 years, they can't solve this problem, right? So actually what we did was to use the blockchain, not as a financial instrument, but we use it as a solution for the proof of provenance. And because of the tracking of provenance, that's why we are able to solve the financial inclusion problem indirectly. And this tracking of provenance I think, is the key importance of what the blockchain has brought to us that traditional technology can't really provide that strong recognition.
Correct me if I'm wrong. So I believe both your projects are building your own protocols. And is there a kind of permission blockchain nature to it instead of a fully public decentralized?
Yes. So just to position Incredible properly, what we've looked at is we've looked at this problem of data that is being siloed, because especially in emerging markets, you really have this, as Roy says, different organizations that don't trust each other and they don't actually work with each other. They wouldn't otherwise share data. But by using blockchain technology, we can do that. We can take data. In our case, we're focusing on the merchant data. So we say there's a business. We know about that business. We know, what is their KYC, what is their other data, if they have lease agreements, if they've got insurance policies, who their trading partners are, and of course, what is their payment activity. And we're able to put that onto the blockchain. It's Incredible is a permissioned private network operating in its own ecosystem with Tendermint and with MongoDB for storing the data and replicating that across different nodes. And through the immutability is making that accessible to numerous parties. So now you can have a telco, a micro-insurance, an auto finance, or a lending house share the same data through this private network. The trick, of course, is that just having a blockchain on its own does not necessarily solve the usage problem, because there needs to be an incentive, there needs to be a trading mechanism. And so the important part there is to have a blockchain and a private network that has some sort of governance, some sort of structure, and let's say interface and a community supporting that. But it still has to integrate and interact with ERC20, or with at least an external blockchain that allows for value transfer. And so to answer your question, yes, absolutely private blockchain network, its own nodes for the storing of business credit data, and then making that accessible through ERC20, interop through bridges, so that there's value transfer for buying and selling of the data.
Okay, I think in the ideal world, I would like everything to be on the public blockchain, right? So full trustlessness, being able to maximize the potential of blockchain in solving the financial inclusion problem we're talking about. But the thing is that once we know what's the kind of problem we are facing in the public blockchain world, the scalability problems, right? The slow confirmation time, right? It's not cheap, transaction fees, and it's unpredictable, right? We can't let these kind of problems be exposed, right, to unbanks. They will not understand what the hard fork means. The only fork they know is the one they use for dinner, right? So when you're faced with these kind of problems, how do you bring something that is so virtual into something that's real, right? Is that we need to have a bridge. We need to have a different set of problems being solved for different type of blockchains. So in the case of Sentinel chain, we created an Ethereum sidechain, right? That is a consortium blockchain formed out of the legal business entities that are all verified by the Sentinel chain, and they act as validators on the chain itself, right? Now, this provides a more standardized environment for business and identity to function in. Because in the public blockchain world is very suitable for consumer-to-consumer, peer-to-peer kind of transactions. But in the real world, right, you want to know who you're dealing with, right? Most of the time, you won't buy a product from a brand that that is unknown, right? You don't know whether they will be around tomorrow. You won't sign an agreement with someone unless you can prove his identity and he's accountable for So these are the things that are missing in the public world. And in the consortium chains, we have taken some of the protocols from the Ethereum world, right, and extended them to support some of the rules and logics that is more conducive for working in the real world, in creating like cross-chain transactions, non-fungible tokens, stable coins. Right? So these are all important elements that we need to make blockchain usable for the real world. And finally, at the individual country level, we have a private blockchain called the Crosspay network. So Crosspay is essentially where the livestock and identity data are being kept under, and it is accessible via Sentinel chain. This is what I mean by different blockchain has its different purpose, and we just need to find a way to link these two worlds together, right, by using them the right way.
So I heard you announce a partnership with POA Network. Can you expand a bit more on how that works?
Okay, this partnership is very interesting because POA Network is essentially building the same bridge that we were starting off with. Right? Both of us are using parity, POA consensus. Now, POA is using the US public lotteries, right, as their validators, right, and they're relying essentially on the reputation of the public lotteries, right, as a collateral, right. So you basically have to trust them because their data are publicly verifiable by the and they are legal, recognized by the US governments, right. So in our case is that we are doing the part of the work that POA Network is not doing. We are basically working with business entities that are verifiable across different countries, and they have a reason for them to exist on Sentinel chain because there's a business function for them to perform. So for them to subvert the network, right, the chance is that they will be destroying their own business and their reputation is at stake as well. So this is the main difference between the two. And the partnership between the POA Network and Sentinel chain is also to demonstrate the ability to create ERC20 to ERC20 bridges, so that ERC20 tokens that is existing in the public homestead network, right, can cross over from the ERC20 bridge in Sentinel into the Sentinel environment. So why would someone want to do that? Right? Because in Sentinel, the environment is trusted as compared to a fully trustless environment on Ethereum. So by creating this bridge, we create an opportunity for token developers to choose whether do they want to continue using their smart contracts or their tokens on the trustless environment, or they can cross over into Sentinel chain in a more sanitized environment for their tokens to operate.
Okay, Roy was showing me just now about the different chains and the bridges that connect each. I think we'll reserve that topic for a future meetup where Roy can go in a lot more depth than a 30-minute panel session can. So watch out for those future meetups coming up. Next question is for Thorsten. So you were explaining to me just now about how credible can be comparable to credit bureaus. So in Malaysia, we understand that as a CTOS or secret. Can you elaborate a bit more about what that means?
Okay. To share, perhaps similar to the earlier presentation about commerce and the trade finance, there's certain segments of business that have not been very well addressed. And for us, we look at these markets and we see that the real engine behind the GDP growth and behind the activity is trade. But it is a lot of the small and medium businesses. It is really those kind of rural areas where there's business happening, there's this trade going on, buying and selling, but nobody knows about these businesses. And the reason we're going after businesses is because it's all the harder going after individuals. Apart from livestock where you have assets and it can be collateralized, but a lot of the individuals that are in these markets looking for credit present a high risk. They might not have very good identity documents, they might not be traceable, they might not be, let's say, committed to repaying the debts. If we look at businesses, businesses are much more established, right? So businesses, in terms of financial inclusion, they play a role in the community. They have a premises. There's only a whole family behind it. They have, everybody from the car to the kitchen, and everything is just part of that business. And what we've seen is that these businesses have a lack of access to credit, a lack of access to finance. So if we talk about financial inclusion, what these businesses generally need is they need cash flow, right? They need money for paying invoices, they want to renovate their stores, they want to buy more inventory, they want to upgrade their products. Everything is cash, everything involves money. But if you don't know about these businesses, you're not going to lend to these businesses. So the comparison there to the credit bureaus is in the Western, let's say, sphere, you have these credit bureaus like TransUnion, Equifax, Course, Tails. These organizations have a lot of data about the market, but what they do is they monetize that data. So they're collecting information about you, yourself, Harith, about me, and about all these businesses, and they're selling that data. And these are multi-billion-dollar companies. So the issue that we see is that in the emerging markets, this is an absence. There's no such presence of these data bureaus. And if anything, the data is generally bad. There's no incentive to add good quality data. Now, if you're a business, if you're a merchant, if you're a trader and you're looking for finance, or you want to get a loan, or you want to get the best insurance package that is out there, somebody's going to be able to look you up and going to be able to find you and going to profile you and say, actually, I see that this business has got 50 data points that they've added to the blockchain. I can see when they started trading. I can see their tax number. I can see their trading history or their insurance policies, and then work with that data. That data becomes very valuable. And so that's where the credit bureaus in the West have become very powerful, but they've also not protected the data very well, right? They've been like hacked, they've been in the news, there's been like 150 million credit records leaked. So we think that by putting that on the blockchain and giving the control to the merchant who owns the data, who generates the data, and to interface with the blockchain, that's an alternate form of credit bureau. And if that's an open platform where people can buy that data, we've got a marketplace, right? We've got consumers who are looking for data, trying to identify the market, and for instance, search how many businesses are within this vicinity or what data do they have, and then be willing to pay for that data. And this creates decentralized credit bureaus for the emerging markets that don't exist today.
Right. A question. So Thorsten, you said that your end users are literally the merchants who will be using your tokens. But Roy, would you say that your end users, the people who are actually using your product or token, are the farmers themselves, or there are other players in that space?
No, not for now. Because right now it is phase one is a B2B system, right? So even though we have some tokens, you will not be exposed to the farmers. They won't understand blockchain. They won't understand the dealings behind it. And even if you talk about the real business operations behind it, it is not so straightforward, right? Because you need to have the contractual agreements on how the tokens is going to be used. Now, of course, it doesn't stop us from eventually becoming a B2B2C model, which is essentially what we want to do. That Sen basically is able to transcend just operating as a B2B, but into the consumer space as well. Nothing stops us from doing that. It's just that when it's being used by consumers, it is a local currency token, right? Which means that essentially it is a closed-loop payment system, and each of these tokens are backed by underlying fiat currencies. Right? So there will be operational details that needs to be ironed out, right? And different countries' regulators may view it differently. Now, this is one of the reasons very similar to how central banks deal with the central bank issued cryptocurrencies, right? You want the banks to issue the cryptocurrency, you want the central bank to issue the currencies to the commercial banks, or you want the central bank to issue directly to the citizens, right? So if you do it directly to the citizens, basically you will be maybe cannibalizing the commercial banks in between. So if we were to take that route, we will be competing with a lot of people, right? A lot of businesses. So we choose to focus on B2B as a more sensible, practical solution for now, and if things works well, then we can consider how we can extend it beyond what B2B is.
Okay, and I'll start with Roy first. How would you describe your users, your B2B clients or partners? How would they use the SEC tokens?
Okay, very good question. So essentially, Sentinel Chain is a cross-border marketplace facilitating financial services to be delivered to unbanked countries through livestock-backed assets. So on one hand, we have the unbanked who right now has the ability to prove that, hey, they actually own this much asset. And on the other hand, right, we have investors, right, who are looking for new alternate investments, a space whereby no one have created before. So this created a new venue, a venture for investments, right, for these people to then consider if I were to lend it to developing countries now, right? Previously, I really don't know what I'm investing into. There's no transparency, that's a problem. I think that's the biggest problem that everyone's faced about is the transparency in those countries. But right now, there's a way for me to say that, okay, hey, hang on a second, right? I can right now lend to MMI, reputable one, that's on Sentinel chain itself, verified, and you can trace who he is, know his track record, and you know that the portfolio of borrowers, unbanked borrowers under him, right, actually owns this much cows, this many cows. All of a sudden, you're able to measure his asset under management, and it gives the micro lender at the local area a higher chance to actually compete in the global lending space by using Sentinel chain, right, to receive funding from offshore.
And Thorsten, so for the credible token, what would your merchants or other end users, how would they use it?
So in our ecosystem, what we do and what we have been doing is for, maybe just to make it a bit more real, is we have all these terminals, right, and we're deploying more and more of these terminals. We've deployed 8,000 of them. So we have...
Sorry, is it similar to what PDX is doing?
You can compare it. The reason why it's not the most ideal comparison is because we started off with fiat, and we work with banks, right? So I have clients in Malaysia, I've got a bank, a very big bank in Malaysia, CIMB in Indonesia, RCBC in Philippines, different banks that we work with for doing fiat processing today. And because we're putting these actual terminals into merchants already, onboarding and signing them up, this becomes the interface to the blockchain. But they don't have to know about the technology, right? All they have to do is click a button and say, I'm going to add information about my lease, or about the car that I own as a business. And so because you're using this for payments today in agency banking, where you're actually playing that role of a bank branch, you're interfacing with backend and effectively with the blockchain. So to answer your question, in this case, the merchant is the one that receives token. So I'm a business, and I'm a small business, and I've got inventory, and I'm selling. And of course, I'll do some business in cash, but I'll do some business electronically, especially if I'm providing agency banking, right, where I've got customers coming in to withdraw money from their accounts and pay their bills. But at the same time, I've got this always connected, it's on my desktop, and I can interface with blockchain.
Well, how did I start on blockchain? Okay, because I came from the banking space, right? So actually, when I first dabbled with Bitcoin was mainly because I wanted to do some arbitrage between the different exchanges and make some money out of it, right? So there's a lot of pricing gap between so it was a very efficient back then. Now it's a much more efficient market. There's no liquidity.
I think you can still do it between Singapore and Malaysia.
Yeah. Let's keep that a separate topic. Right. So, and after that, I went into the interbank payment space, and I realized that, hey, a lot of centralized solutions are actually very, very expensive systems, and it is deployed at a national scale. Now, the problem I see is that because in the top-down, in the centralized system, it is very top-down kind of approach. And not many at the bottom of the pyramid is going to be able to benefit from this approach, because it will take decades to build infrastructure, to train up the resources, especially for those still in the early stage of development. They do not have the kind of mature infrastructure that has been put in place, right? So blockchain created the opportunity for us to rethink into how it could be deployed from a bottom-up approach at the grassroots level that previously no other technologies has the capability to do that. Right? So that's how I got into blockchain.
Any advice for people listening on how to get started into the technical side?
How to get started, right? Blockchain is like swimming, right? You can't learn from a book. You really have to dive in. And one of the problems why a lot of people feel that it's not blockchain usability is a big problem, is because it's not really designed for laymen. It's for developers. It's actually a gigs tool. It's designed for developers, right? So whether you are technical or not, my suggestion is that really take a look at what's behind. Try to understand what's behind the scene, because a lot of it are abstracted away to make the concept very simple for laymen to understand. Right, like Bitcoin is actually not a coin, wallet is actually not a wallet, right? So all these are just concepts, unless you really dig behind. And then once you understand, you will have the interest to know more. I think that's where to start.
I think my closing remarks to that would be that the amazing thing about the whole kind of blockchain development is the community that goes with it, right? There's a lot of sharing, it's very open. I think earlier I was chatting with a gentleman when we said, in terms of doing business in certain markets, it's very closed and it's very rigid. But within the blockchain community, it's all about knowledge and about education, tackling different topics. And to Roy's point, absolutely, it is like an onion, right? There's lots of different layers. So once you're working on the outermost layer and you're clicking on an exchange, it becomes very easy. But I would encourage just looking at like a lot of Medium posts, try to make it easy and very kind of digestible on how to get started. Tools like Truffle and all the open source tools that go with Ethereum are great for just downloading something from GitHub and testing it out. So I think you need to have a technical inclination, or at least an interest, but it doesn't need to come with years of experience. To Roy's point, it is still very new and it is very different. So somebody might just pick up from blockchain and just start from there. And then play with different concepts. So it is a bit like Lego, you've got to put the pieces together, but there's enough open source material out there, so it's really just about that searching and that curiosity. And the more you do that, to your point, Roy, it gets much more natural, and then you can design a product around it. The most, I think, to close off, the most impressive thing is making a blockchain project real world relevant, actually giving it a use and giving it a purpose, and not just having some coin bounce up and down in value.
Dogecoin or Jesus coin,
Exactly, avoiding those kind of projects or a lot of the scams, right? It's about having a real application of the blockchain technology.
All right, and on that note, thanks a lot, Roy and Thorsten. Can you give a round of applause? We still have some time for Q&A from the audience, so anyone who's willing to ask publicly, please introduce yourself first and then ask your question. We have a question over there. We just gotta wait for the mic to warm up.
Yes, it's warm up. Hi, I'm Joseph from BridgeX Network. I would like to ask about payments, since you guys are doing a little bit on payments. To me, there are two major problems to payment. The first one is value, the fluctuation of value, volatility of it. We can always solve it with the go back kind of stuff, like the other one is with the transfer speed. I would like to ask, from your opinion, how are you guys addressing speed? Because for Ethereum, we have a block time of 15, 16 seconds. In general, a full transfer of value will probably take about 2 minutes. That's okay if we're not facing the clients directly. But if you're on a retail environment, imagine that we are in Uniqlo or Starbucks, with a KFC, with a whole queue behind. We can't wait for 1 minute for the payments to go through before we process the next client. How do you think, in your opinion, address this speed issue? How you guys going to do it? Thanks.
Who's sorry?
Let me take the payments part first, because absolutely, I think in projects that have gone into the payment side have had various challenges. You've heard of companies accept Bitcoin payments online and then take it off again, and that's even in e-commerce where it's not that real time. There's two sides to it. On the blockchain itself, the broadcast of the transaction happening does spread across all 10,000 Bitcoin nodes in a matter of seconds, 6 to 8 seconds. But that's just the announcement, right? That's not yet the confirmation, and you've got the block time afterwards. So the challenge there is, can you take that confirmation or that broadcast as a confirmed transaction? There's a few workarounds where that's worked in payments. One of the kind of R&D projects that we put forward to banks and demonstrated on mainnet is that when I'm making a payment and I'm paying Roy, for instance, I'm generating a one-time QR, a one-time wallet address. So that wallet address is only known between the two of us at the point in time of the transaction. So if I make a payment and he sees that broadcast, it kind of means that I've been able to take that snapshot, I've been able to take that wallet address and make the payment and witness that right away. And then the business model effectively underwrites the transaction, because you're saying, okay, these two people must be doing business together right now. Perhaps there's a question of collusion or some other elements that still have risk, but in principle you can reduce the risk already, perhaps even up to a certain amount. So that takes the volatility, that does not consider the volatility, that's just a technical solution. But maybe the long and short of it is, even at this point, payments on blockchain is not ready for mass adoption or retail adoption. And we're looking more at the data side anyway, so we're letting that play out, because I personally think that Lightning or similar type layer 2 scaling solutions such as Plasma or other Ethereum sidechain approaches are better, Casper, are better than using the technology that's there today.
Your question is value and performance, right? Now, let's answer the second question first. I have explained just now that we don't use Ethereum as our payment mechanism, largely because of those problems that you just mentioned, right? So that is the reason why we use a consortium blockchain and a private blockchain to mitigate the limitations of the public blockchain. Now, of course, at the end of the day, the blockchain is just a spectrum of trust, right? In the case of a Sentinel chain, we rely on the validators to perform the proof of authority consensus as opposed to proof of work on the public blockchain. So that's shaved the time down to 5 seconds. Now, that is only really because we need to use certain smart contract functions, right? We do not need to use the smart contracts basically at the cross-pay level. We are using a different private blockchain platform that goes at 1,000 TPS, right? Now, so that is how we manage different levels of performance depending on need basis, right? If we just want a transfer of value, actually it's very simple. We don't even need smart contracts to do that, right? But if you want something more advanced, that's where the speed trade-off has to come in. Now, the second question is on the value. Right now, you are right to say that the value is really a key problem in these countries because nobody is going to be able to price their Apple in Bitcoins or in your tokens, right? So we have to. In fact, things in every country that we deploy cross-pay, we have a local fiat equivalent, which is a stable coin pegged to their local currencies. Now, there are many ways to do it. Of course, if you look at how the gold model does it, it's backed by gold, right? That's why this is just backed by fiat currency, that's all, okay? And of course, then to provide more transparencies, the Sentinel chain itself is basically the mechanism, right, used to monitor how SEN tokens is being converted to the different local currencies, right, via exchange contracts. So this is how we deal with the value problem.
Okay, that was a very long answer, and I imagine you guys can discuss it even more afterwards. Do we have another question before we sign off and get you guys to networking again? All right, then please give a round of applause for Roy and Thorsten.